Today we'll talk a little bit more on some of the dividend stocks that you should be investing or buying. Now, there are some advantages in buying dividend paying stocks. The biggest advantage is that they offer you tax-free returns up to dividend payments of up to 10 lakh rupees. So which means if you earn dividends that total 10 lakh rupees, they are exempted from tax. You don't have to pay any income tax on them. So one of the big advantages of investing in dividend paying companies is that you are exempted from tax up to 10 lakh rupees. Now, there are many companies. Look at the index currently. We are seeing the index at almost 41,000 or thereabouts. Now at these levels, it's obviously a little risky to buy into stocks because you're seeing the Sensex at a very high or historic high, as we call them. Now, so what you should do is look for some of the dividend paying stocks that offer you dividend maybe twice a year, thrice a year. Now we picked up some very good dividend paying stocks. We just want to discuss three of them. Now, generally, if you see the public sector units, some of them offer very fantastic dividends, or as we call them, dividend yields. Most of them, we have found several of them. GAIL offers, Gas Authority of India offers very good dividend yield. ONGC offers very good dividend yield. REC and PFC, which are two power finance companies, they offer very good dividend. You also have a company like Coal India, which offers you very good dividend yield. But let me talk specifically of three companies today. One is ONGC, the second is GAIL, and the third is Coal India. Now, if you see ONGC, the current price of ONGC is around 126 rupees. And if you go by the dividends declared in 2018-19, the dividend yield on the stock comes to around 5.5 to 5.6%. Now, as we told you, it's tax-free. If you see fixed deposits like fixed deposits from State Bank of India, they offer you a maximum interest of 6.5%. And here you're getting 5.6% tax-free dividend yield up to, as I said, 10 lakh rupees as dividends are tax-free. So when I say tax-free, always assume that it is up to 10 lakh rupees. Now, so 5.6 is a very good dividend yield to start off with. And in fact, if the stock drops lower, your dividend yield could go as high as 6%. So if you get a stock like ONGC around 21 to 120, 121 rupees, your dividend yield could go up to as much as 6%, which is very, very attractive. Coming to the prospects of ONGC, will the share price really fall? From these levels, as we said, the stock is protected by way of dividends, so we don't see too much of a fall from the current levels. Secondly, also the company's business model is very good. It's a very robust model. It is the #1 oil and gas exploration company in the country. So business is assured. It has got a whole lot of blocks from where it explores oil and gas. So all in all, it's a very good company. It offers very good dividends and dividend yield, and the price to earnings of the stock is barely 7 times 1 year forward earnings, which makes the stock very attractive to buy at the current levels. The second stock that I want to talk of is GAIL. Now, GAIL is a stock that has fallen from almost levels of 180 to 116 rupees. At 117 rupees, the stock is at a 52-week low, which means you are getting the stock the entire year. This is the lowest price for the stock of GAIL. Now, what's so good about GAIL? I mean, we like GAIL because its business model is exceedingly good. It's a #1 in the gas business in India in terms of pipeline and gas distribution through pipelines. It is a top petrochemical player, top or gas player in both upstream and downstream. So it's a leading player. Now coming to it, it's got so much value in also in its associate or subsidiary companies. For example, GAIL holds about 32% stake in MAHANAGAR Gas. MAHANAGAR Gas itself, the shares are valued at almost 1,000 rupees. So a 32% stake means that itself is so valuable for GAIL. It also owns shares in Indraprastha Gas. So what we are trying to tell you is, apart from GAIL's own business, it owns shares in so many companies where its value is so high. This makes GAIL a very interesting pick. Secondly, also, if you go by the past dividend record of 2018-19, GAIL India should fetch you a dividend yield of around 5.5 to 6% or thereabouts, considering that its stock price has crashed. So that makes GAIL India also a very attractive player. The last stock that we want to recommend is the shares of Coal India. Again, if you see Coal India, the 52-week low price of the share is 178. Currently, it's quoting at around 192. At the current levels, the dividend yield is around 6.8% based on last year's dividend paid. But this year, we expect Coal India to pay a little bit more extra dividend because of maybe the government will ask PSU companies to pay extra dividend this year to curb the fiscal deficit. That's perhaps. So even if it declares a slightly enhanced dividend, we expect the dividend on Coal India to be around 7%. As we said, fixed deposits like of State Bank of India are just giving you interest of 6.5%. Here you're getting a dividend yield of almost 7%, and again, as we mentioned, it's tax-free up to 10 lakhs. So which means it's a very, very good attractive dividend yield for people who want to buy. Coming to business prospects, Coal India is a cash-rich, debt-free company, and assured prospects of in coal mining. India imports coal, so the business prospects are quite assured. The business model is robust. So all in all, that makes Coal India also a good pick. So 3 stocks that we recommended today is GAIL, Coal India, and ONGC in terms of dividends and dividend yields. That's it for now. Keep subscribing to our video section and keep viewing our videos. We come out with videos regularly, and hope to see you soon.